Jai Hind to all and welcome in this video lecture of tax planning and management. I am covering today set off and carry forward of losses. First of all, we should understand that what is the meaning of set off and carry forward. Set off means adjusting the losses against the profit of that particular financial year. That means if you are having a loss in some head, then you are allowed to set off these losses against the income generated by you in the same financial year in the some other heads. Losses can be carry forwarded to the next assessment year if there is no adequate profit in the same year. Carry forward will be next step. First, you have to set off the losses with the income in the same head or in some other head, and then if the losses are not set off because of the inadequacy of the profit in the same year, then only it will be allowed to carry forward. A person can set off and carry forward the losses incurred as per the Income Tax Act 1961. It is a big boon. It is basically a benefit to a person because it plays an important role on the financial condition of a person who has incurred such losses. So the legislature affected the provision of set off and carry forward of the income losses so that the SSC would not have to bear the burden of paying tax in case of losses. That means in 1 year you are suffering losses and you're not paying taxes in that particular year. Next year you are having some profit and you are paying taxes. So that means in case of losses, if you are carry forwarding the losses and set off against the profit of next year, you will be benefited, and this benefit is given under the Income Tax Act. If income of particular source is exempted from tax, then losses from such sources cannot be set off against any income. That means if you have income under section 10A or 10, any subsection of section 10, then losses out of such sources are not allowed to set off or carry forward. The process of setting off of losses and their carry forward are to be done as per following steps. Step number 1 says that first you have to set off your losses in inter-source adjustment. Inter-source adjustment means in the same head. For example, if you have two houses, from one house it is a loss and from second house it's an income. So in first step you have to set off the losses of one house with the profit of another house within same head. Head is income from house property. Next step is inter-head adjustment. That means if you have losses and it is not set off in the same head, then it will be set off in the another heads, different heads if you have. Inter-head adjustment in the same assessment year. Step 2 is applied if losses cannot be set off in the step number 1. You cannot jump directly to step number 2. You have to follow sequentially. Now step number 3 says that if after step number 2 there are some losses which you are not able to set off from the different heads, then you can carry forward these losses to the next financial year. Carry forward of losses only when loss cannot be set off under step number 1 and 2. There is the maximum limit in terms of time, that how much time you can carry forward in the different heads. We will be discussing later on in the slides. Now the rules regarding to intra-head set-off. That means the set-off of losses within the same head. Under section 70 of Income Tax Act 1961, if the taxpayer has incurred some losses, then the taxpayer is allowed to adjust it from any other source of income under the same head. That the same example which I have taken in your previous slide, that if you have loss from one house, that can be set off against the income generated from the another house. This process is called intra-head adjustment of loss from one business against the profit from another business. This is another example of PGBP. The SEC cannot do intra-head adjustment in the losses of the following cases. These are the exceptional cases. You are not allowed to do this intra-head set-off in the cases which are given below. First case is speculative business. If you are doing speculative business, then in that situation, speculative business losses cannot be set off against any income other than income from speculative business. That means if you are having two speculative business, you are allowed to set off between these two, but speculative business losses cannot be set off against non-speculative business losses. Do remember this. It is not allowed to set off speculative losses against any other business or profession income, but the non-speculative business losses can be set off against income from speculative business. That means speculative to speculative allowed, speculative to non-speculative non-allowed, but vice versa is allowed. Non-speculative business is suffering some loss, it can be set off against the income of the speculative business. Next example is long-term capital use. There is rule against this. It cannot be set off against any income other than income from long-term gain. But the short-term losses can be set off against long-term as well as short-term capital gain. Long-term losses can be set off only against long-term gain. But in case of short-term, these are allowed to adjust from long-term as well as short-term capital gain. Next is income or losses from owning and maintaining race horses. Losses from the business of owning and maintaining race horses cannot be set off against any income other than income from business of owning and maintaining race horses. That means similar type of business you are allowed to adjust your losses. From no other business, you cannot allow it. You cannot claim it. Income losses of a specified business. In case of a specified business under section 35 AD, the losses cannot be set off against any income except the income from a specified business, but the losses from other business can be set off. That means again, it is one-way traffic, one-way rule that losses of a specified business can be set off only out of the profit of specified business, but non-specified business losses can be set off. This is the exceptional one. Now, the rules related to income or losses interhead set off. Interhead means in the different head. Interhead adjustment is the next step, step number 2 of set off of losses. Under section 71 of Income Tax Act, any taxpayer, if he has incurred losses under one head of income and there is no other source in the same head, then he can set off these losses in the other heads of the income. For example, you can set off the losses of business, losses of house property from the salary. For example, here I have house property income can be set off against profit of other heads. It can be summoned against salary income, business income, income from capital gain, and income from other sources except the casual income. Second is non-speculative business. Non-speculative business can be set off, the losses of non-speculative business can be set off against the income of salary or house property, except salary. That means salary is not allowed to set off. Except salary. That means it can be set off against house property, income from capital gain and income from other sources. In the following cases, losses cannot be set off under inter-head adjustment. What are these? Speculative business losses, specified business losses, capital gain, long-term capital gain, that means long-term capital losses, okay, in the head of long-term capital gain. Income losses from owning and maintaining race horses. There are certain exceptional cases also. For example, losses in speculative business cannot be set off against any other income. That is exception number 1. Losses under the head capital gain cannot be set off against any other income except the income under the head capital gain that I have already covered under section 72. The losses from activity of owning, maintaining race horses cannot be set off against any other income. Business losses cannot be set off against salary. Losses cannot be set off against winning from lottery. Now, what are the rules of carry forward? After making intra-head and inter-head adjustment, it may happen that the income losses remains unadjusted then such unadjusted losses can be carried forward to the next year for the adjustment against subsequent year income. There are different provisions have been framed for carrying forward the losses under different heads of income under income tax laws. First is, I have taken here, is house property income. If there is a loss in house property head, then SSE can carry forward these losses up to 8 years, immediately succeeding the assessment year in which the loss has incurred. But do remember that this carry forward loss can be adjusted only out of house property income, no other heads. Okay, that means you are allowed to carry forward it up to 8 years, but the adjustment is allowed only out of house property income. In this case, an SSE can file belated return. Belated return, in case of belated return, you can claim this deduction. Non-speculative business losses. Under Section 72 of Income Tax Act 1961, an SSE can carry forward non-speculative business losses up to 8 years, immediately succeeding the assessment year in which the loss has incurred. Then he must file ITR within due date and the prescribed under Section 139(1) of Income Tax. Otherwise, he cannot carry forward the losses. That means if you are filing a belated return, you cannot claim the deduction of non-speculative business loss. You are not allowed to carry forward it and set off. It can be set off only against business income. This is again a condition. Capital gain income losses. If the individual is unable to set off the capital losses in the same year, both long term and short term, it can be carried forward. And the maximum years of carry forward is 8 assessment year. Capital losses from the business are allowed to be carried forward, and carrying on of this business is not compulsory. Next is speculative business loss. Under Section 73, income losses in speculative business can be carried forward at up to 4 years immediately succeeding the assessment year in which it has incurred. The SSE must file income tax return within due date under Section 139(1) prescribed to carry forward the losses of speculative business, and it will be adjusted only against the income from speculative business. Income from non-speculative business is not allowed to adjust. Now, what about brought forward losses? Brought forward losses or unabsorbed depreciation is like if a company suffer a loss before claiming depreciation, then the entire amount of depreciation will be treated as unabsorbed depreciation. However, if the company suffer a loss as a result of depreciation amount, then the business loss will be nil and the balance of depreciation amount will be unabsorbed depreciation. This we can understand with the help of this example. It can be observed that Arjun's business income before claiming deduction under Section 32 on account of depreciation is suppose 84,000. And depreciation allowable as per Section 32 is 1 lakh. Hence, after claiming the deduction on account of depreciation of rupees 1 lakh, there will be a loss of 16,000. This loss is on account of depreciation only, and it will be treated as unabsorbed depreciation. Unabsorbed depreciation will be allowed to carry forward up to infinite time. You can claim it in the next year until it is fully absorbed. That's all for set off and carry forward. Thank you so much.